Okay, well, there you go. It's almost Christmas time. December 22nd, it's Friday. It's also the weekend. So we have the weekend, and then before you know it, the week's going to be over, and it's going to be New Year's. This is Rogelio, Vida Property 60 Realty, and I have a little special treat. Like you saw there on the poster, we're going to be talking about FHA and how, obviously, thinking about 2024. Let's not get too complacent about the year, and let's just at least start planning. But FHA, that's a very interesting program. It's been around for many years. But you know what? I'm not the lender, so what I've done is brought on a special guest to talk about just that. Let's bring her on. Hey, so this is Nahtalia. How are you doing, Nahtalia?
I'm great. Thank you so much for having me, Rogelio. How are you?
Good, good, good. So, Nahtalia, you're with Universal Lending. Is that right?
That is correct. Yes.
Okay, and you've been around for a small minute.
I've been doing this mortgage world industry for 25 years. I started when I was 5 years old.
Exactly, just like me, almost. We're almost right there. Right. So, first of all, good to see you. Probably won't see you before, vacation time. About to kind of get this thing going. We'll get this rolling. You ready for the holidays?
As ready as I can be. Definitely enjoying the traditional Christmas. I definitely miss my family in Costa Rica. Best times are around, your family and the traditions from your country. And but we're gonna make it special.
Well, I'm doing visiting family, and talked a little bit before about how now it's more about the experiences and spending that time and enjoying much more than worrying about gifts and going shopping and trying to satisfy everybody's kids and all that kind of stuff. But hey, what about we could just get to it? FHA. Popular loan is not for everyone, but let's talk about what else had there at the beginning. 5 reasons FHA is a good loan. What do you think?
Well, I'm a tremendous advocate for FHA, which I'm still if I would like to, but I don't practice this. I'm a D underwriter, which is direct endorsement underwriter for FHA government loans. So I learned mortgages pretty much with FHA.
FHA, yeah. It's a good program to get started. And even if not, sometimes if you're going to have another home, you can get a second home. You have first with a conventional, and for whatever reason, it makes it easier to acquire that property. But anyways, without getting much into it, let's start off with number 1, ADUs. Okay. First, let's say what an ADU, accessory dwelling unit. It's not everywhere. So as you can see, we're in Denver. There might be some other where zoning allows these secondary, smaller units in the same lot as your primary residence that you can rent out, you can lease out, you can have family. But tell me about that. How does FHA come into play here with the ADU?
So it's very interesting that FHA came up with something that will help the affordability, right? Because right now things are not affordable. They're just sustainable in a way, but it's just affordability.
It's expensive, yeah. Yeah, everything's expensive, more bills, yeah.
So how can we help consumers, borrowers, how can we help them obtain become a homeowners, right? Utilizing something that is tangible, income. So an ADU can definitely be a finished basement with an independent separate entrance. Okay. It doesn't need to have a kitchen. It has to function just like a single family residence. It cannot be a second unit of a duplex. So the classification has to be an accessory dwelling unit. Okay. So for income purposes, just to kind of paint the picture, FHA allows to utilize up to 75% of the gross rental income, which is going to be documented through the appraisal.
So if you're planning this and maybe you're looking at buying a home that includes an ADU, you want to do this math and figure out how much you're going to rent it for so that you're not short, right, when it comes to the income you can use.
Exactly. So, use a real estate agent and a professional, right? And
we can find those. We can definitely find those ADUs.
Exactly. So you'll run the numbers for the clients. You'll be like, hey, you know what? This has potential. This has the potential to increase your purchase power, and that's how you work with the lender, because you can, like Nahtalia, guess what? There is a unit and there is history, and they can rent it for $1,500 a month.
Yeah.
So I will do the math, and just to keep in mind, you can go up to 75% of the gross income, but you cannot exceed, the cap is up to 30% of the total monthly income generated by the borrower's income, job, salary, whatever it is.
There's people that are used to and are comfortable with subletting like a room. The idea of generating this income, have some renter come in, they're okay with that. They're thinking Airbnb. I think this is a better deal than Airbnb.
I agree with you.
Because 100%. You have a hard time using that, potential Airbnb income when you have an ADU. And now you're saying that about the basement. Well, wow. I mean, that's even better, because I can definitely find more of those than we can find ADUs.
Right. So as long as it has to function just like a home, like a house. It has to be a house.
Yeah. It has to be basically run independently.
And also a converted garage. If he has the permits.
You can even do that. I've had some of those. I've had some deals where we went into a house, and now if it has to be permitted, the seller would have to have done that, right?
That is correct. Yes.
Yeah.
And also, Jaffa has a program that is called Smart Step, or the Smart Step Plus, which is a program that will help with the funding for the down payment on a property that has an ADU.
So you can have down payment assistance and ADU. Use that income to qualify. Wow. Okay, so that's one, I think, a very, very interesting, and one that we can definitely be used to get somebody to that extra level that maybe they couldn't before without using the FHA feature of including ADUs. So let's talk about a second way that FHA is a great product for certain people, and that is the streamlining. Tell me what that means.
Streamlining is a refinance that does not require an appraisal. We don't have to justify the value of the property. We don't need to verify employment. We don't need to verify, you have to have credit history on the mortgage payment. Basically, we have to prove that the payment has been made on time, and pretty much that's it.
So basically, it's an easy way to refinance this without having to go through a lot of processes, requirements to qualify for that refinance. Because guess what, people? When you refinance, it's not like a done deal. You still have to go through the process of qualifying for that new loan. So the FHA streamline, from what Nahtalia is telling us, it's just that, it's an easier process. Streamlining it's you have an easier time qualifying. It facilitates that process, especially in this market. So right now, and I've had some other videos and content out there about, it's always a conversation, right? Interest rates. Interest rates are high. The idea is that they're going to be going down. That's the conversation out there in the news, everywhere. And people are, I'm going to wait until they come down. And guess what? Demand is going to go up. You have more competition. You may have to offer more, or as more than comparative, comparing to today. There's probably less negotiation going down, that you're going to be able to do. So you can lock in the property if you can qualify today at that higher rate, and then use the streamline, refinance it, make it easier down the road when rates do drop, right? I imagine there's going to be you're going to have a pipeline of people that are on FHA loans right now that you're going to be looking at when rates start dropping, for the possibility of, hey, let's do a streamline.
Very important thing to mention is the same people that were approved for the purchase, they have to stay in the loan, they have to stay in the title. They cannot be like, oh, now I can remove whomever helped me co-sign. No.
Don't go and make it. And if you're planning on doing something like that, have a conversation with your lender first, right?
That's exactly right.
Which is the same thing, even before people go shopping or want to apply for a loan, let's plan it out first. Don't go out changing jobs before you apply for the loan, don't go out buying and people kind of getting ahead of themselves. Maybe they're thinking they're going to do some good things by getting a new line of credit or opening up a new card. And, you know, right now, obviously, we talk about the holidays and the holiday spending, travel, all that. I always have a conversation if you're planning on doing this, you know, big moves, you know, buying a home or buying an investment property or refinancing. Before you do that, it save you a lot of money, time, and stress.
And, you know, to just piggyback to what you're saying, the consumers in general and have shown signs of less expense, spending less money, right?
Yeah.
You know, traveling. So that's what's causing. That's pretty much what Nicholas Light mentioned during one of the events that we had for NAREP.
Is Federal Reserve guy, economist guy. He knows what he's talking about.
Yeah. So he said Americans are not showing any signs of slowing down on spending money, so rates are going to stay the way they are. They're going to increase more, and they did.
Yeah.
They say the moment we have the reports back and we see that they're holding back and they're just not spending so much money, that's when rates start to decrease, and that's exactly what happened.
Yeah. So we're already 10 minutes into this. Let's move on to a third feature, a benefit, depending again on the situation that FHA offers. That is assumability. Loans are assumable. What does assumable mean?
Assumable means you as a real estate agent want to sell a house for your seller and it's not moving, right? What else can I do, right? You know, I don't want to have my seller to spend more money, you know, upgrading the house or, you know, contributing more than what they're supposed to contribute towards the closing costs, right? Because they have to have a certain amount of money net back to them. So when owners have a low rate, as you know,
low interest rate, they got this few years ago, even last year, right?
Yeah, exactly. So when they have these rates, well, last year sounds like it's actually almost 2 years ago when we had those rates.
Well, so, yeah, but even like the 4.5%. 3%, you know, before the 2.5s and the 3s.
It wouldn't be worth it if, knowing that the rates are going to drop around the corner. I feel it's more like very attractive to have a mortgage on a 20, 25 year or 15-year term or whatever for somebody that has the actual down payment and can afford the payment. Yeah. So the homework is for the agent to call the servicer to make sure that they're opening to do an assumable note. And then the person that is purchasing the property can assume the loan with the rate that is already tied to.
But I'm gonna tell you this, Nahtalia, for those people that bought last year and they didn't buy at the 3% or whatever, some of those people are gonna have to sell, and they don't have a lot of equity, and so somebody can come in without having to, because you still have to purchase price, and you still have to cover the difference to the what they owe, right? Mm-hmm. So they're gonna have less equity than the person that did buy 2-3 years ago and has that 2.5-3% rate. But crap still happens in life, right? People decide to split up, family issues, job loss, things like that happen. And for somebody that is in that situation and they're in a situation where they can't sell and they don't have too much of equity again, the assumability, even at a par 5, and again nowadays people are like 7, they're like in the low 7s, and they're like, oh, this could be a 5.5, even for the time being, because they, go back to the string line, do all these other things, right? That could just be the extra boost that brings that new buyer versus another home, in the same area. But so assumability, you still have to qualify for that loan amount, right? As the buyer. Mm-hmm. And you still have to use an FHA loan. And would they have to go through the same company that services the loan currently, or?
Yes, basically yes. They do.
Okay, so it definitely has to share that information of who the contact is and all that. Communication becomes really important for that scenario, right?
That is correct.
Now,
yeah. That's definitely one of the things that people don't really. I feel like they feel like it's too complicated, but I feel if you're proactive, if you know what you're doing, you can do them.
Right, and that usually sometimes it's that's what it takes. Sometimes is putting that extra work to get that better deal. And again, once rates drop even further, then assumability doesn't become that big of a benefit, right? Like it really has to make sense for the time being for that certain person and that certain home that they want that is assumable, right? That they have an FHA loan on. So that's number 3. Let's move on to number 4, the benefit for FHA. The whole point is to make it easier for people to get into a home, right?
Yes.
So the process or the standards for qualification are typically easier. Like what are some of the ways in which it's easier to qualify for an FHA loan than it is for a conventional loan?
So FHA is more lenient for those folks that have less impressive credit. Let's put it that way.
Yeah.
FICO scores they pretty much 580 is what FHA allows, but investors definitely want to stick with the 620 and above.
What would be a FICO score? You say, oh, okay, this guy's or this borrower could potentially be conventional, but then if they're like at this score, they're like they're more like an FHA candidate.
Borderline, I will say 660-ish.
660-ish. And of course, there's always income, other, debt, other things to take into account. But if we're just talking about credit-wise, so normally if you want to get to the convention, you want to be above 680 then. But FHA could be a good product for you if you're under that, definitely under 660. It is still possible, right?
I mean, it has a lot to do with credit history more than really FICO score driven, because remember, the automated systems they have all parameters, right? And so there's a lot of things, indicators on your FICO score, on your credit history. There's some hits for late payments. There is a charge off account that is causing for that FICO score to be lower. So all of those things you have to take in consideration, not just having a low FICO score because maybe you don't have enough credit. That's a different story.
And vice versa. You could have a high credit score with only one account that you just started 6 months ago, and that you may still not qualify for conventional even though the score is high, right? So it also goes in that direction.
I mean, it definitely has to do with the parameters and it has to do with the system, but conventional loans, they definitely are driven by FICO scores. FHA loans are definitely more lenient when it comes to credit. With credit history, derogatory credit, more than anything, medical collections don't have to be paid.
But work history.
I'm sorry?
Work history, rent history, what are other things?
Work history has to be the same pretty much as conventional. Okay. They have to meet the same criteria. And loan to value, basically, 3.5% down payment. It's very low down payment for this type of loans. Debt to income ratio, the percentage of the total amount of expenses including your mortgage payment divided by your monthly gross income. You can go up to 55% on FHA versus conventional. I mean, if you have a good FICO score, you can go maybe up to 50 on a Freddie. Most likely it counts up at 45.
And I've gone through this before. Sometimes we have a qualified buyer. We're out there, but they can go either way. They can go conventional or they can go FHA, depending on the home, the situation for the property itself, where they may be looking at, well, we may need an extra $10,000 qualification, and maybe FHA will take you there instead of the conventional. Or there's some other condition of the home, for example, that come into play. But definitely, if you have FHA as one of the possibilities,
yes,
definitely want to look into that. The other one was the mortgage insurance, right? What's the situation with FHA on mortgage insurance?
The mortgage insurance is not going to be any different for somebody that has a lower FICO score or a bit higher FICO score. It's going to still be the same 0.55 as 0.50, depending on the loan to value. But it's not something that is. It will not impact the FICO score. The factor of the mortgage insurance premium is going to be the same versus conventional. conventional is a little different. I mean, I think for a first-time buyer, it's definitely a great loan. The stigma is, the condition of the property, but the properties have to meet the FHA or conventional
And when we do a
standards.
search, you can classify it as a listing that this home would be able to qualify, or that would pass basically the appraisal conditions for an FHA loan. And that's like a main, that's like a big factor, because on the searchability of the properties, even on the listing side, we have to pay attention to that, whether we want to include FHA in the searchable fields. Because if it's not, it could be eliminating a whole bunch of FHA borrowers that you just missed out on.
And if you believe in your ethics, right, as an agent that is representing your seller, unfortunately, a lot of agents are not wanting to deal with borrowers that have FHA loans because of this, not because I don't want to deal with. No, I mean, you're definitely not servicing, like you're not helping your seller by avoiding FHA borrowers. I mean, at the end of the day, they're gonna get their money no matter what. It's gonna be through a loan or cash, but it's just a stigma.
Yeah. So far, ADU, streamlining, assumability, easier to qualify. That's 4. Right there, 4. So let's get to the last one. Number 5. Let's talk about interest rates and get back to that. Everybody's talking about it. So FHA does have some benefits on things you can do to diminish the impact of interest rates. What are some of those things, Nahtalia?
Normally, FHA loans have lower rates than conventional. If you're comparing, two scenarios, same parameters, etc., FHA is going to have much lower down payment.
So you're already starting off at a base a little bit lower.
Correct.
Mm-hmm.
And on top of that, you can definitely use the benefit of buying down the rate with a temporary buy down. Whether it's a 3-2-1, 2-1, 1-0, you can definitely get that lower rate for the amount of years that you want to buy it down with.
So depending on the situation, we're able to, if you're using an FHA loan to at a cost, right?
Mm-hmm.
Reduce that rate, and you got to do the math. That's part of the whole thing.
Yes.
Some of these, all of these, some may or may not apply, but that's why you do the, you have your consultation and go through this before going under contract and going out there and looking at home. Even if you're like, I qualify for this, you still want to go deeper into figuring out different strategies. So there you go. That's 5 ways that FHA could be a benefit for you if you're looking to make a move. So Nahtalia, thanks for your time. Let's enjoy our holiday week and get ready for 2024 and come back and let's do this again.
Absolutely. Thank you so much for having me, and you enjoy your holidays, and everybody out there. Be safe.
Okay. Adios.